Section 13 of the Integrated Goods and Services Tax Act. Section 13 of the Integrated Goods and Services Tax (IGST) Act plays a pivotal role in cross-border taxation. It helps determine the place of supply when either the supplier or the recipient is located outside India. For tax professionals, understanding these provisions is essential for navigating the complexities of international services taxation under GST. This framework simplifies tax liability and ensures compliance across borders. Let's explore its key elements in an informative and practical manner. This section applies when both the supplier and recipient are located outside India. It serves as the cornerstone for deciding where the supply of a service is considered to occur, ensuring precision in determining tax obligations. For most services, the recipient's location is considered the place of supply. However, in cases where the recipient's location cannot be ascertained during regular business processes, the place of supply defaults to the supplier's location. This default rule bridges any gaps in cross-border transactions. Certain services have unique place of supply definitions tailored to specific business needs. Goods-related services. If recipients must physically provide goods to suppliers, the place of supply is where the service is performed. For electronically delivered services, it is where the goods are situated. Physical presence services. When services require the physical presence of the recipient or their representative, the place of supply is where the interaction occurs. For services related to immovable property, be it real estate, accommodation, or construction, the place of supply is determined as the property's location. These provisions provide clarity for tax professionals managing real estate or property-related services. Services connected to events, such as admission fees or event organizing, are taxed at the location where the event takes place. When services are performed across multiple locations, including taxable territories, the place of supply refers to the taxable location. This rule is particularly important for large-scale projects and operations spanning different regions. For services spanning multiple states or union territories, the place of supply is determined individually within each region. Value allocation is done based on contract-specific terms, offering transparency to avoid tax disputes. In some cases, the supplier's location is considered the place of supply. Banking and financial services to account holders. Intermediary services. Short-term transport hiring services, excluding aircraft and vessels. Passenger transport services use the boarding point as the place of supply. However, for onboard services, the location is tied to the first scheduled point of departure, adding precision to transportation taxation. With the global rise in online industries, services like online information and database access utilize the recipient's location as the place of supply, identified through billing addresses, IPs, or card issuer details. The government retains authority to specify circumstances and services to mitigate issues like double taxation or non-taxation. These clarifications ensure consistent application of GST laws in a global context. Section 13 of the IGST Act clarifies the place of supply for cross-border taxation. Tax professionals can ensure compliance, optimize planning, and prevent disputes by mastering these provisions, allowing them to handle international GST complexities effectively.